Well, it really was. I mean, the headlines don't tell the story. This was a remarkable quarter, and I look at it and I see higher collection volumes, I see price increases, I see cost controls. It seems like everything's come together.
Well, I think it is. I think you've talked to David many times, and what David would tell you is, if we could get 2% price and 2% volume and get our costs under control, then the business model really flies, and it's flying right now.
You know, it seems but best since 2011. So some of this also has to be economic activity.
I think some of it's economic activity. We tend to convert about 1 GDP point into a half a point of volume.
Okay, all right.
And so let's say we get some help from an infrastructure, a TARP-like bill. That makes a big difference to us. But when you look at EBITDA, for example, for last year, 8% EBITDA growth in a 2% economy is incredible. A lot. Yeah.
Now, you've also won some very big contracts. You talk about New York in the contract for disposal. How does that work? And that contract's $1 billion.
It's $1 billion. It's over $1 billion. Same with Los Angeles. Both of them are north of $1 billion. Different types of contracts. New York is a marine transfer station, and so that volume comes into our transfer operation and then moves down to various disposal facilities.
And you've got these landfills that are just, money to be made, right?
That's right. That's right. So it's a great contract for us. We're excited to win it.
Okay, now, one of the things that David had told me over and over again, tough business, recycling, didn't seem tough this time. It seems like maybe it's technology, maybe it's better negotiations of contracts. Recycling's back. It's making you money.
Yeah, so in 16, it was about a 9-cent tailwind for us. But only about 3 of those cents were commodity prices. Okay. About 6 of it was really de-risking the business, taking cost out, sharing the risk with customers. This year, we think it's probably going to be 3 cents of tailwind with the flip-flop, about 2/3 of it being price and 1/3 cost control.
Even though we're not that great at recycling in this country, right? I mean, we mix things up. We don't put them in the right bins.
Yeah.
You can still do okay.
There is a big education component to what we do. We've got to make sure that people understand what's recyclable. We get stuff coming into these recycle plants like bowling balls and crazy things that really don't get recycled.
All right. Now, there's a kind of a split decision in the conference call, and I'm split on it myself. We got a deregulatory president. But the fact is that regulations, for the most part, a lot of the mom and pops that sell to you can't meet the regulations. So, I mean, is it 6 or half dozen for you?
A little bit, yeah. I mean, we're not quite sure where regulation or deregulation is going right now. So we're kind of agnostic at this point because we really don't know what to expect. And I guess I'll leave it at that. I don't know where where the administration is going to take deregulation. Right.
Now, you do have a good read on economic strength. We're talking about the infrastructure spend. That would be something that I would say if we did, because today Secretary Mnuchin said to our Becky Quick, listen, we're going to do a big infrastructure spend. I mean, so sure enough, if I wanted to hold out and say that happened in 2018, that could be a driver for waste management next year.
Without question. So when you look at infrastructure spend, we tend to convert about a point of GDP into about a half a point of volume.
Right.
Infrastructure might be more than that. It might be 7/10 because more of it's industrial spend.
Right.
And so anything that would raise the GDP of the overall economy would convert to us to probably 7/10 of a point of volume increase, which
that
is
would
fantastic.
be big. It would be a nice increase. Now, David has always told us that you guys are at the forefront of technology. Anything new in technology that's saving money for the company?
Well, so David's probably talked about the onboard computers. We have onboard computers on every single truck.
Right.
And that really has been used to address efficiencies.
Okay.
Going forward, we'll look at how we use that to benefit the customer. And then I think on the disposal side is where you could see disruption in the next decade or so. Those landfills have a natural end of their lives. And so what do you replace them with? And we're spending some money trying to figure that out.
Okay, now free cash flow, you say you've been fabulous at returning on dividend, buyback, but you're still committed to doing a lot more acquisitions if they're affordable.
Yeah, well, that's right. And so we bought 2 or 3 companies over the last 3 years that are kind of $500 million purchase price type companies.
But they've added revenues pretty immediately.
And so we don't have anything right now on the horizon, but we'd like to do those. We just want to make sure that they're at a reasonable purchase price.
Okay, so at this price, is it better to raise your dividend than buy back? I mean, the stock's had such a run.
Yeah, so what we look at with the dividend is where is the next kind of new normal in terms of free cash flow. Last year we raised the dividend 6.5%.
People love that because a lot of people own the stock from David.
This year, 3.7%. And what we're looking for is, more than 1 year of trend in the new norm. Our guidance this year is on free cash is 1.5 to 1.6. And that's up from literally in 2012, $825 million in free.
You know, you inherited a remarkable company. You've taken it to the next level. You got to tell David to say hi because he has really got a lot of people in the stock correctly.
Yeah, absolutely.
Okay, that's great. That's Jim Fish, President and CEO of Waste Management, which just remains a fabulous long-term story. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.